Hi, I'm Jim Juback, and welcome to this week's quick pick video on Palo Alto Networks, big cybersecurity firm. Okay, it's Palo Alto is kind of an interesting case study. So what do you want to own going forward? Do you want to own stocks like, say, NVIDIA that are down almost 50% in this bear? Or are you interested in stocks like Palo Alto, which is held very, very steady? It's only down 8% for 2022. And instead of 40% discount, according to Morningstar's calculations, it's trading at a 15% discount. You can see, this is a chart, so you can see that this stock held really, really steady, got a little bump there, got a big downturn here, but with earnings, it has bounced back up. And the earnings were incredibly solid. We're talking about sales up 25%, annual recurring revenue, which is an increasingly important part of software because everybody's moving to software as a service. So the question is, how much, not new stuff do you get, but how many subscriptions do you get to stretch out your revenue? That's up 67% year over year. Billings were up 27%. That's a great performance in this market, especially when you consider the fact that the estimate of cybersecurity market is about $130 billion. And what we're seeing is a consolidation, that we're moving from companies having a lot of tools and platforms to having few. Morningstar estimates that in the enterprise market, that's big companies, companies have like 60 to 80 security platforms, security solutions. And that the trend is to shrink that number down to maybe 15 to 20. So the big firms that could offer solutions across the whole gamut, and that's Palo Alto, are going to pick up share as companies say, hey, we really can't deal with solutions to our security that don't talk to each other very well, or that aren't adaptable, that are not based on platforms, because what we're seeing is an increase in the number of threats and intensity, but also in the complexity of the threats and the sources of threats. And threats are getting more complicated, and they're coming from more places, so that you've got threats coming in through your internet, through your phones, through your iPhones, all of that stuff, so that you really need a series of platforms that are constantly updated, so you have to be on the cloud, where Palo Alto has made that transition, and that talk to each other and they can get updated all the time. I hate to buy anything into what I think is a continuing bear market, and as you can see from the chart, you do get these plunges. This was back in the late October. You had a move from 170 down to 140. So, that's a significant drop. If you got another drop like that, I'd certainly buy it. I don't care where we are in the term. If you want to start dollar cost averaging in, I think sometime maybe in February would be a good time to do this. The stock is already in my long-term portfolio, so I don't have to, which I don't trade out of, sell out of, unless something really bad happens to the fundamentals. Nothing's bad happening to fundamentals here, so I'm continuing to hold it. I would add more in some of the other short-term portfolios if we get either a drop or further on into 2023. Thanks very much for watching. If you like this video, give us a thumbs up. Subscribe to my YouTube channel. That way you get notification when we do the next one. If you want more of my stuff, including the long-term portfolio that has Palo Alto network in it, subscribe to my free site, that's jubackpicks.com, or you can go to my paid site for more, including that portfolio and others, including my millennial portfolio, which also has Palo Alto networks in it. And that's on my paid site, jubackam.com. Thanks very much for watching.